Good morning and welcome to our show, Shop Options. I'm Shelley Winson and I own a local health insurance agency named True Choice Benefits. We specialize in consumer-driven healthcare strategies for small and mid-sized employers. And with me today is Jim Brown, who owns Fish Window Cleaning, which is a local company specializing in commercial and residential window cleaning. Thank you for joining us today to talk about the Shop Options program. This is a really important issue for us to talk about at this time because health insurance premiums are a significant expense for small employers, and buying group health insurance through the Shop Federal Marketplace might be a way that businesses can save money on those benefits. Many small business owners in Arizona have opted to carry individual or family health insurance for their families and have encouraged their employees to go to the federal marketplace to buy individual and family insurance on their own. And most of them have done that for the main reason of hoping that their employees will get the advanced premium tax credit, sometimes called the subsidy, to help them pay for those individual premiums. But what's happening in the individual health insurance market here in Arizona right now is that we have so fewer options than we used to have that there isn't much choice left in that market. For the year 2016, we had a third of the choices for individual and family and health insurance than we had the year before. And for 2017, we're going to have even fewer plan options and fewer health insurance carriers offering individual insurance here. So it's a good time for small employers to look at offering group health insurance. The second part of the issue with the advanced premium tax credit is that because of the way it's calculated, we have far fewer Arizonans qualifying for that credit, for that help in paying their premiums, than we anticipated that we would have when the law was passed. So Jim has agreed to come on our program here today and interview me about the Shop Marketplace program so he can learn if it might be something viable for his business and you can learn if it might be something viable to help yours.
Good. So what is the Shop? Why should I look at that as an option?
Well, it's a program that was created by the federal government as part of the Affordable Care Act. It's called SHOP because that's an acronym for the longer name, which is the Small Business Health Options Program. It originally was intended to kick off in 2014, but there were some problems with the system and getting everything ready. So 2015 was the first year of the program. And the government has been making strides in the program over the past few years and really want to get the word out about it. The main reason that they created this program, it's an online marketplace for small group health insurance that was intended to provide more choice, convenience, flexibility. It is intended to be a way for employers to offer more options in an easier fashion for health insurance for their employees. And one of the biggest reasons that you would want to go through the Shop is to take advantage of the federal tax credit that you can get only by buying your insurance through the Shop.
Oh, great. What can I qualify? What type of companies qualify to participate?
Actually, you could qualify.
Okay.
The companies that are qualified to participate are those that have they're considered small employers under the federal law, which is 1 to 50 employees, or at a state's choice, they could consider a small group 1 to 100 employees. So this marketplace wasn't created for the larger companies, it's created as a convenience for the smaller companies. It was not intended as an avenue, though, for the self-employed or for husband and wife businesses. So in order for a company to qualify, you have to have at least one non-family member W-2 or potentially 1099, but typically W-2 employee in order to buy your insurance through the Shop.
If we do go that direction, how many employees have to participate? Is there a certain level we have to get to?
That's a really good question. In buying group health insurance, there's always been some kind of a participation requirement. So you have to have a certain number of employees take the plan or be covered elsewhere. In the first 2 years that the Shop was offered, that concept wasn't fully understood, and so actually you had to have 70% of all of your employees participating, and you didn't get to discount those that had coverage elsewhere. That's changing for 2017. So now you don't have to count the employees that have coverage through Medicare, through a different group insurance, through a spouse. So it's 70% of eligible employees for 2017.
Okay, great. How much is it going to cost both my business and the employee?
That is a very good question, because one of the reasons that the government created this SHOP program was to offer more affordable coverage. That's one of the goals of the law in general, both for individuals and small businesses. However, the way that it is working right now, the premiums are the same for you if you buy your small group health insurance plan through the SHOP, or if you buy it outside of the SHOP directly from an insurance company, your premiums are going to be the same. The rule for what an employer has to pay is that they have to pay at least 50% of the employee-only premium. So an employer isn't required to pay for any coverage for dependents, but they can if they want to. So you can pay anywhere, any calculation your company chooses is right for you, from 50% of the employee-only premium up to 100% of all of the premium. So there's a wide range of what you can pay. And there's a couple of different ways that you can calculate what you're paying. The company can decide to do a flat percentage. So say, we're going to pay 50% of the premium no matter what coverage is chosen. Or you can do 50% of employee only, as we talked about. Or you can come up with a flat dollar amount. So you might say, we're going to pay $250 a month for each employee, and $500 a month if they have any dependents covered on the plan. It's a wide open field for how you can calculate what the employer pays, but you have to be consistent with all of your employees, and you can't discriminate against any of your employees. So a lot of flexibility, but also some rules that govern it.
You talk about the tax credit. How do we know if we qualify that or if our employees qualify for it?
Yep, there's actually two different kinds of tax credits that we're talking about. The first that we've already mentioned is the advanced premium tax credit, sometimes called a subsidy. That's what an individual person or family can get if they buy their coverage through the individual marketplace at healthcare.gov. If a company is offering a group health insurance plan that meets the requirements of being a qualified plan federally, that employee is no longer eligible for that advanced premium tax credit for buying their own insurance. So it's an either or. A company that's offering their small group health plan through the SHOP marketplace can qualify for a federal tax credit of up to 50% of what the company is paying for insurance for 2 consecutive tax years. So that's an important note. You can only take that for 2 years, and it's for a tax year. So if that's something that you qualify for and that's important for you, you want to strategize about when you implement that health insurance plan to get the most out of the tax credit. If you qualify for the tax credit and you buy coverage, for example, tax year 2017 and tax year 2018, you can get the tax credit for both of those years. If you buy your insurance mid-year, let's say you buy a plan that starts August 1st of 2017 and carries through for 2 plan years, you're only going to get credit from August through December for 2017, and then for the full tax year for 2018. So in order to make the most of that money that you're getting back, you really do want to plan ahead on when you offer benefits. The tax credit federally is given back to you when you file your tax return. So the business has to file a tax return to get the tax credit. And let's say for some reason in that year your business doesn't owe money. Maybe you're owed a refund or it's flat. You can save that tax credit and use it in future years. So you can only use it, you can only earn it over 2 tax years, but you can use it until it's gone, okay, those dollars that you've qualified for. The tax credit, the largest tax credit that's available is 50% of what the company pays, the employer paid portion of the premium. So not anything that the employee pays for their own coverage. That's for-profit businesses. Tax-exempt businesses can qualify for up to 35% of what the employer pays for those benefits, for those 2 tax years. And it's actually a graduated tax credit. So it applies to all businesses that have 25 or fewer employees and whose average salary for employees is $50,000 a year or less. And you don't have to count the owners in that calculation. So you take the owners out, you look at the rest of your employees, and you calculate what the average annual income is for your employees. There's a tax credit calculator available at healthcare.gov, which is really helpful in helping you figure out whether or not your company might qualify for some of that tax credit. And when I say it's graduated, is you actually get the most money if you have 10 or fewer employees making $25,000 or more a year. And then it's a graduated credit up to that full 50% for companies up to 25 employees making $50,000 a year or less. So as you can see, it's kind of a complicated calculation, and the best way to figure it out is to use that tax credit calculator at healthcare.gov.
Do all the local insurance companies participate in the shop? I know you've talked about people not doing it anymore, but.
Yep. Actually, unfortunately, not all of our insurance carriers have decided to participate with the shop. In 2016, we only had 3 carriers participating. It was Blue Cross Blue Shield of Arizona, HealthNet, and a United Healthcare program called All Savers. Those were the only 3 plans that you could purchase through the shop. And United Healthcare offers a lot of different health plans, but this is only their All Savers program, which is different than some of your businesses might be used to, because it's a newer program that they've developed. Aetna and Humana offer group health plans for companies with 2 or more employees, and they've chosen not to work through the shop. And Cigna offers small group health plans for companies that have 25 or more employees, and they've decided not to work through the shop. There are also a lot of newer programs called partially self-funded or modified self-funded programs that have chosen not to participate or are not allowed to participate through the shop, because the shop is only for fully insured health plans. So there are a lot more choices available to an employer than are available through the shop itself. This past year, 2016, HealthNet offered the most. It offered all of the 11 plans it offered to small businesses through the shop, but Blue Cross only offered a couple, and All Savers only offered 2. So quite a few, far fewer choices than were available if you were purchasing directly from the insurance company.
Okay. Why would I want to push my employees and myself through the shop? What are the reasons to do that?
Yep, one of the best questions ever. Why would I even consider doing this? At this point in time, and it may change in the future, the only real reason to purchase through the shop is to get the tax credit. You have more benefit plans available to you outside of the shop. You are working directly with the insurance companies, which at this point is still a little easier. We'll talk about more about that in a minute. But you're working directly with the insurance companies kind of under the ways that things have been done for years, so they're a little more established rather than working through the new processes and procedures. And the price is the same. So for a benefit plan design, if a plan is offered through the shop and outside the shop, the starting premium is exactly the same, and the rules for contribution and participation are the same. So the tax credit is really the key.
Okay. And you mentioned that it's tougher. How easy is it? Is it 100% harder to use, or is it a real nightmare to use? I don't know. Yeah.
Yeah, that is a question I get very often from employers, because they're concerned about their workload, but they're also concerned about how easy it is for their employees to use the system. And I will be completely open and tell you at this point in time, the shop is not at its full envisioned functionality yet. Okay? It is a fully online system. So everything throughout the process is done online. There are no hard paper materials to give to your employees. You can only use online systems to review materials, which is absolutely fine for some companies. Other companies kind of prefer having something in their hands that they can look at and read. Everything is done through the shop, through the website, healthcare.gov, or through the shop telephone services that are offered by healthcare.gov. You can't really do anything directly through the insurance company. Employees are enrolled online through the shop. What happens is, if you're working with a broker like me, or if you're doing it your own online, you're going to upload all of your employees' information into the system with an email address. And the email address is the most important thing. You can't do anything without an email address. I've actually had customers that have had to create email addresses just for the very purpose of using their insurance. And the enrollment information is pushed out to that email. They have to use their own specific identifier to go through and apply for coverage or waive coverage online. Premiums are all paid directly to the shop as opposed to direct to the insurance carrier. And the shop's time frames are far tighter than what you get when you're working directly with an insurance company. So if you are paying premium use HealthNet as an example. If you have a group plan with HealthNet and your premium is due July 1st, if you haven't paid it by about July 15th, they kick you out a letter saying, hey, your premiums are overdue, and if you don't pay them by the end of the month, we're going to cancel your coverage. You cannot do that. You do not have that luxury when you work directly with the shop. Premiums have to be paid the 15th of the month for the following month, period. Okay? So it's a very structured system. Enrollments have to happen that same way. Enrollments have to be completed online, and they have to be completed by the 15th of the month for an effective date the 1st of the following month. There's no leeway. The system, as of yet, does not have the capability of backdating an effective date for an employee. So as an employer, if you're offering a group plan, you have a responsibility to offer that plan to your employees at the date that they're eligible. And technically, if you don't get them enrolled in the plan by that date, you're responsible for their coverage for that month until they get enrolled in the health plan. So it's a really serious issue to miss these eligibility dates. One of the other problems I've had with the shop in the past year is with premiums. The shop will not enroll a newly eligible employee if they feel that your premiums are in arrears. And even if the fault lies with their system that you're not getting credit, even if your plan is not in arrears, if the system shows you're in arrears, they won't enroll new employees until that problem is fixed. So there are some real significant service issues, things you have to be aware of and things you have to do differently when you work with the shop. And brokers like me who are certified to do so, we help you walk through those things, but you have to be aware of them because of your responsibility as an employer when you're offering a group health plan. And I will say, the government is very interested in making this program work, and they have done some significant improvements over the last couple of years. So the original goal is what the government wants this system to be is a true online marketplace where, let's say of those 3 insurance companies that are offering plans, you send information to your employees to get them in the system. They look at all of those plans from all of those carriers and they can do anything they want. So I could take a bronze plan with Blue Cross and Jim could take a gold plan with All Savers, and each one of you in this room could choose a different plan. And all those plans are going to be administered by the shop, premiums paid to the shop, and then divvied out to the insurance carriers. So we're not there yet, but that's the goal eventually. Right now, if you're buying group health insurance direct from an individual carrier, you can offer multiple plans. Even groups of 2, 3 employees can offer multiple plans, and each employee can have a different plan, but they're all with the same carrier, of course. Okay. So, so in the end, when they reach that functionality, it will be a very nice thing. It's just not there yet. What they did implement for this coming year, for 2017, you will be able to offer multiple plans within a coverage category. So coverage categories under the new ACA compliant plans come in 4 metal levels for groups. You've got your bronze plans, silver, gold, and platinum. As you can assume by the names, platinum are the richest, most expensive plans. Gold is just below, silver's just below, and bronze are the least expensive plans you can buy. Bronze plans are calculated to meet all of the qualifications of being a qualified health plan and to cover about 60% of your care needs for your essential health benefits in a given year. Silver plans are expected to cover about 70%, gold about 80%, platinum about 90%. So that's the broad strokes of how plans are designed these days. So for 2017, if you're an employer buying a plan through the shop, you can choose to offer your employees all silver plans. And they're going to be able to go in online and look at the silver plans and decide which ones they want. Again, I might take Blue Cross, Jim might take All Savers. You can go to different carriers, but all within the same coverage level. So that's a new thing that's going to be rolling out this year. One of the improvements I'm hoping to see in the system is the way that they explain the benefit plans and the pricing for those plans. Right now, when an employer is pre-searching to decide whether or not they want to offer a plan, they're only able to see the cost for an employee, not the cost for that employee's family members. So as a broker, what I'm doing right now is I'm quoting directly with the insurance carriers to see what they have. We're looking through the shop, but to figure out what those employees' premiums will be if they add family members, I'm calculating that manually on the side from the quotes I'm getting direct from the carrier, even though the enrollment might eventually happen through the shop platform. So that's something, if you're working with someone like me, that you can do to see all of your options. And that is a future improvement that the shop is working on. I've had a few meetings with the Center for Medicare and Medicaid Services this past year and the Department of Health and Human Services, and they are dedicated to making improvements in the system and getting eventually to where the program was intended to be in the beginning. So, the Arizona State Premium Tax Credit. I want to throw in a little bit about that before we open it up for questions from the audience. So the business tax credit we've been talking about is a federal tax credit that is claimed when the business files its tax return for that tax year. There's also a program available in the state of Arizona for businesses that are offering health insurance on a group basis for the very first time or after having not done so for a while. So if you're a company that has at least 2 and fewer than 25 employees, you can apply for the state premium tax credit. You will typically qualify for the credit if you have not offered group insurance for, the past 6 months. So maybe you've had it in the past, but you haven't had it for a while. You're looking at reoffering it again. The program will reimburse up to 50% of what the employer pays for that employee's health insurance. So again, the credit is based on the employer-paid portion of the premium, not the portion that the employees pay for themselves. And the maximum you can get is 50% of that employer participation, up to $1,000 per plan year for a person covered on an individual plan, on a single self-only plan, and up to $3,000 for that plan year for a person who has 1 or more dependents covered on their plan. What you do to get this tax credit is you apply for it with a 1-page written application that you send to the state of Arizona. Arizona has $5 million every calendar year to donate to this program. They process applications on an as they receive them basis. The program typically runs out of money about September, October, somewhere in the year. So if you apply earlier in the year, you're more likely to get approved for the tax credit. You can apply once ever. If you are awarded the tax credit, you have to get a group health insurance plan in place within the next 60 days. You can't have the group plan in place before you get the certificate, and you have to put it in place within 60 days after. If you don't implement a group health plan within that 60-day period, you are not allowed to apply again ever. So it is a once-only shot. Again, something you got to think about and strategize about beforehand before you apply. If you apply late in the year and you don't mind putting off getting your benefits, then the state will waitlist you. And when money becomes available, then they will send you a letter saying that you're now eligible for that program. And if you are awarded a certificate the first year and you continue to meet your eligibility requirements, you can apply for 2 more years, and 3 years total is what you can use the program for. It does not supersede the federal tax credit, so it's not an either or. You can use both, okay, at the same time. But again, you can only use the federal tax credit for 2 consecutive tax years ever, unless that law changes. And you can only use the state credit for 3 consecutive benefit plan years, not calendar years, but benefit plan years if your plan starts mid-year. So both excellent programs, both really good ways that you have an opportunity to save money and offer your employees a nice, affordable, nice coverage group health plan. Jim, did you have any other questions?
I did do the state plan. The federal wasn't offered at that time. I'm looking at that. But it was very easy. Like I said, it's a simple form to apply for. The insurance companies are the one that collect the money, and they're good about that. So you don't have to worry about, well, I had to pay the insurance company $20,000, and I'm waiting for my $5,000 from the state or whatever it is you're going to get. So the insurance company does that right off the bat, so that's pretty easy about it. Yeah. My only complaint is I think all federal programs, and this is state programs, tend to do this, and that's why nobody comes off of this stuff unless they're forced. It'd be better to have the program kind of slowly wean you off instead of, because the first year you are off. You really can't, it's hard to drop down the level of coverage you're giving your employees, and all of a sudden you're paying the full boat for them instead of half of it, so.
Yeah, It would be nice if they weaned you off a little easier so you could budget for it. And Jim brought up a really important point that I want to reinforce. The federal tax credit comes off at the end of the year when you file your tax return, but the state tax credit comes off each month off of your billing statement. So it helps you during the plan year.
Yeah.
Okay. Questions from the audience?
So, Jim, was the max amount then $1,000 for a single person per year? Or is it 50% of what he's paying for the premium for that? What is it?
Yes, it is 50% of what the employer is paying for that premium up to a maximum of $1,000 per year for a self-only plan and $3,000 per year for a family.
Okay. And if somebody does the online form and let's say that they're waitlisted and in the meantime they go ahead and put together a group plan, does it make them ineligible?
It does make them ineligible.
Okay, so they have to wait to
Yes.
get approved to start
That's right. Yep, timing is very important.
Okay.
Yeah.
And is it your experience that people who are putting applications October, November, December generally get approved?
When funds become available. So they get waitlisted, and yes, if you meet the qualifications and the state has the money, you're generally going to get approved. It's just they don't get the $5 million boom January 1st. They get it throughout the year. So typically if you apply, let's say you apply in November and you get waitlisted. I did this year have one client who got funds and was able to implement a plan for January 1st. I had other clients that had to wait until February and March.
Okay.
So you really have to be able to put off getting the group plan if you're going to wait for the money throughout the year. And sometimes that is why companies will forego using the tax credit, is because they have a reason to implement now rather than being able to wait.
How does that work when we have to have coverage come January 1st independently?
I think,
And
yeah.
forcing employees to go get that coverage, and then I'm going to make them go swap again in February?
Yes, you're bringing up a really good concern, actually, yeah. There has to be a lot of planning and communication with your employees, because that's exactly what was happening with these groups I had that were waitlisted, is that people had individual plans, and some of them did go to the marketplace and buy an individual plan for January 1st. Some of them just bought a plan for January 1st. It takes coordination and it takes planning. And what we did with those companies is we just really upfront communicating with the employees, and actually they were really happy they were getting a group plan. And so most of the employees, they grumbled a little bit about the hassle of it, but they were so happy that they were eventually getting a group plan that their employer was going to help them pay for, that they didn't mind the wait. Because you got to remember, if folks are applying for plans on their own as an individual, not all of your employees are going to qualify for the advanced premium tax credit. So in my experience with the groups that I've had over the past few years, I might have a company with 8 employees where some of the lower paid, newer, maybe younger employees might qualify for a tax credit, but the older, more experienced employees that that earn more money, because they've gotten to that level of earning more money, don't qualify for a tax credit. So you've got kind of a disparity in your workforce. When an employer puts in a group plan, the employer's paying for everyone, as opposed to just a couple people getting a tax credit. So employees often appreciate a group plan more.
Heard a couple of different things about being able to define what a full-time employee is, and then there being an exception towards the end of the year on participation rates.
Thank you for bringing that up, because that's something I had in my notes that I forgot to mention. When we talked about that 70% participation rate for your employees, there is 1 month a year when that does not apply to you, and it is from November 15th through December 15th. If you implement a group plan and have all of your paperwork in and everything done by December 15th for a January 1st effective date, the participation rules won't apply to you.
But you can still qualify for a tax credit.
You can still qualify for a tax credit, yes. And that is those dates, November 15th through December 15th, are true even if you're buying directly from an insurance company versus buying through the shop. So you don't have to buy through the shop to get that month free of participation requirements.
And is that for one or more, or is that 2 or more?
That is for group plans. It is The reason we say one or more is that you have to have at least one person covered, and it can't be just the owner, okay? So if I own a business and I have a W-2 employee, and I put in a group plan and only that W-2 employee enrolls, that's a group plan, and we can do it. But if the W-2 employee waives because she's covered by her husband and I'm the one that wants to do it, that does not qualify for a group plan. I would have to buy an individual plan for myself.
Is that true if the owner is a W-2 employee?
That is true even if the owner is a W-2 employee. Yes. It's on purpose. It's the way the law was created. It's the way the government set it up because they want to keep that shop truly for businesses and the individuals in the individual marketplace. Now, it's becoming a problem, and maybe that'll change in the future because of the lack of good individual plan options that are available in states like Arizona. So it may change in the future. And let me answer the second part of your question first. You asked about the definition of a full-time employee. There are inconsistencies in the Affordable Care Act for how you define a full-time employee. When you're looking at, if you offer a group health plan, you have to offer it to each employee who meets eligibility requirements, and the federal definition of eligibility is an employee who works 30 hours a week or more. There are some special rules regarding seasonable employees and variable hour employees, but in general, if you offer a group health plan, you have to offer it to employees who work 30 hours a week or more. It cannot be higher than that. It can be lower, it can be 20, it can be 25, can't be higher than 30. If you're looking at the part of the Affordable Care Act that talks about the business, the small business tax credit, when you look at whether or not you qualify, they are defining employees full-time at 40 hours a week or more. So the hours are different for that calculation. And if you're looking at whether or not your company is subject to the shared responsibility rules that govern large employers, the rule is 50 or more full-time equivalents, and you have to look at all of your commonly owned businesses. So let's say that you own 3 different businesses with 3 separate tax ID numbers, but you and your wife and your son own all 3. Okay, so that is considered a commonly owned business, and that falls under, you have to look at all 3 of those entities when you look at whether or not you're required to offer health insurance on a group basis or pay the shared payment responsibility penalty. So just in those 3 areas, you can see there are inconsistencies with how a full-time employee is defined.
So I think I did hear you confirm I could define for my business the full-time employee at less than 30 hours.
Yes.
Okay.
Yes, but it will be subject to what the insurance company allows. So typically an insurance company, most of them will allow part-timers covered at 20 or 25 hours.
Okay.
Yeah.
And what about bringing, sorry.
No, go ahead, finish yours first, and then we'll jump.
Bringing on employees mid-year?
Yeah, employees, you have to set an eligibility date for your employees. It can be no longer than 90 days right now under the law. It used to be different. So if you want coverage to be effective the first of the following month, which is the easiest for administration, then you can't have a probationary period longer than first of the month following 60 days of full-time employment. And that's what most customers will have. If you define it as 90 days, then that insurance coverage is going to become effective on the 91st day. And then how you pay premiums is going to be dependent on what that effective date is. Typically the way it works is if you have someone eligible between January 1st and January 15th, then you'd have to pay the whole month's of premium. If they're eligible January 16th to January 31st, you don't pay that month of premium. It gets complicated for billing purposes. So for your own ease and the ease of your employees, most companies
Individual space?
Yes, there is. Those are separate decisions. Yeah. And we don't know yet for sure exactly what plans are going to be available January 1st of 2017. There's been lots of press releases and lots of speculation, but we won't actually know exactly what's available until November 1st when, the switch flips and open enrollment starts. But we do know that there will be fewer carriers and fewer plans. And on an individual basis is what I'm talking about now. There will be fewer carriers, fewer plans, and they will be all HMOs.
But the same could be true, because in the shop, they're all HMOs anyways. The Blue Cross is, they didn't put their statewide PPO in the network, they just put their HMO in, right?
Correct.
And so the truth is, I mean, right now, there could just be Cigna and Phoenix Health Plans selling insurance, right? So, we don't really know what shop products are available until the door opens.
No, SHOP can be purchased, and thank you for bringing this up. SHOP can be purchased any month of the year and runs on a plan year basis like regular group health insurance. It doesn't have to be calendar year. So someone can start their plan October 1st and then it will renew the following October 1st.
So there's a good chance that if somebody is participating in the program now, that they probably won't pull out in November and December. For
Yes.
January 1st to 17th.
Yes, there's, in all probability, what they'll say is, you know, we're gonna keep the groups we have, we're just choosing not to enroll any new groups as of January 1st. Good question. Any other questions from the audience? Yeah.
You mentioned that an employer has to either do a flat percentage or a flat fee towards, the employee-only coverage. Is that determined plan year? I mean, if I say I'm doing a percentage, am I locked into that as long as forever and ever?
Typically, yes, but as usual, I have a longer answer than that. If you're purchasing through the shop, you're making that decision for the plan year, for the whole plan year, and it has to be a flat percentage or a flat dollar amount. That's what the system can accommodate. Outside of the shop, it can be more complicated than that. I actually had a customer that said, we're gonna pay 90% of the employee only and an extra $100 a month if they have children covered on the plan. Not a spouse, children. And that was something we manually calculated to help them do. So outside of the shop, I mean, the world is your oyster, really, for how you can calculate it. Typically, the insurance company will lock you into doing it for the whole plan year at that rate. But if you have a solid business reason for why you want to make a change, and you're making that change in writing, and you're putting it in your employee handbook and implementing it, oftentimes the insurance company will allow that. You do have to request an exception in most cases, request a written exception. But typically, if you have a real good reason for why you're doing it, they'll honor it. Or you can always change it at your next renewal date. Other questions from the audience?
Well, the other issue, I guess, is that the only thing that's going to be attractive about the shop, based on what you said the last 40 minutes, is that it's complicated, it's confusing, it's not as graceful as doing a group plan, is they have to have pretty significant tax liability, right? If they don't have significant tax liability, there's no interest, right? I mean, if you've got a group of 8 and they're paying $2,200 in taxes, they're not going to care about this.
Yes, I would agree with you that that is a very true consideration. But I did have one customer who received a really significant tax credit, like $26,000 the first year. So it can be really viable for the right company. But otherwise, yes, I agree with what you said.
But you also said the credits can roll forward?
Yeah, you can save it, what I meant. You can only earn it in
Right.
2 consecutive tax years. But if you don't have a tax liability one year, rather than it being taken off the top, you like store it up in a bank. And I'm not an accountant, so I'm not using the right words. So I'll just say you store it up in a bank. Yeah.
Right, and then Shelley,
Yeah.
since you're a group specialist, is the commission component the same?
Commission is the same whether you purchase through the shop or outside of it. Yeah. Same way for individual plans. Yeah. Well, you guys have been a really great audience, and Jim and I have been very pleased to have you here with us today. So thank you very much for coming, and please stay tuned for our next very exciting program, whatever it will be.
Or the musical guest.
Yeah.